Okay, so hello and welcome everyone. Very good evening. Yes, a huge and a warm welcome to all our valued viewers who have arrived today. And today, by today, we mean the PMI day, the Purchasers Managing Index, or Purchasing Managers Index. Please pardon me because I'm a bit, uh, I have a sore throat. I have a sore throat today, so bear with me as we go on. And today's obviously, by the title that we are going to discuss a lot about purchasing managers index. So, what it is about and how it impacts the market, we are going to see first, and then kind of look at all the assets that we were looking at in the previous week, how they have evolved over time, and what is the process, what is the place that we are standing at, and where will we be in the coming week, in the coming month. So, yes, yes. So let us begin our show for today. As you all know, this is a small request from my side to understand that this particular live stream involves comments which are for educational purposes only and nothing from a perspective of helping people for trading. It is about understanding what is trading first. Okay, so it is all about education, and that's what we do here at Market Insights, right? So let us begin with the calendar first. Let us see what has happened today till now and which news is going to come out very soon in the market. Okay, so this is our calendar, and yesterday uh, the Japanese bank has brought out this monetary policy meeting minutes, which was previously held its own meeting, and the minutes has come out. The same thing has been repeated in the minutes that we will continue a very easy money policy, and we will try to help the economy to revive itself. Although the inflation has uh, overreached as opposed to the target that was previously set by the Japanese chairman Kuroda. However, it is completely based upon the fact that Kuroda is going to step down in April. Okay, after 3 months of this particular year, he's going to step down, and he's going to obviously uh, change policies then. Okay, so they are going to change policies, and they are going to be looking at some other ways in the economy. The economy is obviously very stiff in a position where, okay, yeah, so the Japanese economy is not at all very easy right now. Okay, the inflation is rising, and there is external pressures from the European Union side, from the American side. Obviously, the recession has stepped in, and a lot of other factors which will surely impact Japanese economy. And Japanese economy, if it is based on services and the goods to be exported, then global downside in demand or even supply, for that matter, will uh, surely harm this economy, and that is why they are following a very easy money policy right now, so as to because they know that the global economy is not has not yet fully revived itself, and also we have not seen the amount of response that we should have after the opening of the China, right? So we have seen the opening of China, but not a very strong response, right? Because there is obviously a lot of factors involved in China reopening. Okay, and those revolve again around the same questions, around the demand, around the supply, right? Supply side constraints still hold up, right? And a lot of factors are responsible for not a very smooth reopening of that particular economy. So a lot of factors are constantly working in the market right now, and recently we have seen today that we have got purchase managing index for European zone, okay, for German and French and overall as well. And after that, it has been released by S&P Global. Okay, it is a global credit rating agency, and it basically provides us the insights into different economies, into different businesses. All right, so this is the scenario. Okay, and just now at around 3 we saw the flash manufacturing index and services PMI that has come out, and it has had quite a huge impact on GBP USD, which we'll see in very short time, right? So overall, there has been a huge impact of PMI today. We have seen it in euro as well as in pound. Okay, and as you see, the list goes on, and list goes on till this point, where around 8:15 when we will end our live session, this particular data, Flash Services PMI. Obviously, Flash is the first one in the overall, you know, uh, there are two reports basically, Flash and Final. Flash is the first one, immediately it is released. So it is having a bigger impact than the final one. Okay. So overall, we will see what the PMI is saying about the economies, and we will also see what kind of impact it had on different assets, and everything completely based on will be completely based on educational analysis, right? It is not something about this one. So let's get let's get us ourselves started. Starting with GBP USD. So this is the scenario: a huge downfall, almost an outstanding, shower here of the whole prices. Now, why it has happened? What kind of factors were involved? We only we will see that. So what we have seen is that the Flash UK PMI composite output index was at 47.8, which is 24-month low, right? That means it has dropped to a very significant downturn. Okay, it has shown a very significant downturn in the private sector business activity, right? And there is a very low consumer confidence also alongside it, if you will see. So both the sides are showing falling output volumes as well as weak demand. Okay, so both the sides of supply and demand are currently, in tatters. So we will see that Flash UK Services PMI is also at 48, which is lower than 50, which is lower than December's number of 49.9, and it is also 24-month low. Okay, so composite output index and the services output index has been low. Again, we will see Flash UK manufacturing output index at 46.6. Okay, it is a slightly better number from December, 44.4, and it is 6-month high. Okay, apart from that, Flash UK manufacturing PMI at 46.7. Okay, it is slightly better than December's number for 45.3, and it is 4-month high. So overall, we have seen that somehow the number is still showing, the composite index is still showing that it is the UK economy is contracting. Okay, and despite the problematic scenario with the United States of America, about the recession, about a saturation in the prices of United States dollar. Still, the prices went down all the way. Okay, now downfall was almost around. If you will see, this is a 15-minute time frame. Okay, if you will see, the downturn started at 2, went all the way down till this point. Okay, so almost 0.8%. of downturn in almost like 2 3 hours. Okay, within 2 hours it has come down. Okay, and this shows us the power of PMI, how the market can react very swiftly against low PMI numbers, against weak economy indications, right? And this we have done previously, so we'll just remove this. Okay, we had drawn all these levels previously, and we will continue to draw some levels completely from an education point of view. I hope you guys are ready for this, because I have seen previously that this levels have worked absolutely fine. Okay, many a times the resistance was taken, support was taken, then the prices moved up. It went up and then it came down all the way here, and again it has moved up this particular support. So this particular line has provided us multiple opportunities. Okay, and it is only fair to note how the market has worked. It has went up, it has come down. This particular support line has worked as a mean, almost as a mean. Okay, the prices went down and then kind of ranged here because there was not much around. Okay, and then again a volatility upside, then it came down, then it went up. It is almost like it is bubbling. Okay, it is almost like bubbling from this point, coming down, cooling down at this point, and then again bubbling upside, and then again it has fallen down now. But this fall down has consolidated the price point below the low of this range. Okay, this was the low. Let us delete everything first so that we have a clear palette of lines and figures so we can see the chart better, right? Okay, this is not working. Wait a second. Let us just delete everything. Okay, then draw fresh levels as to see where we are headed and where what we can expect from the market, right? So this was the scenario. We had already done this trend line, something like that. Let us keep it that way. Now currently the price is below, if you can see very well, and the price has come down and has come down below the low of the previous range that was formed. Okay, and it is now ranging below it. Okay, so this is the scenario, current scenario. It is in a precarious situation. Currently the market is waiting for US PMI. Okay, because the counter currency is USD, right? The market is waiting for US PMI, and this US PMI is 100% going to dictate where we are going to go. Okay, from an educated guess. Okay, because nobody knows what the number is. Okay, except for when it is going to be released. My prediction says that it will be under pressure. Okay, so we might see somewhat of a trajectory upside. Okay, or else if US surprises us with some form of a strong and okay, if US surprises us in some manner, okay, and it tries to float up the numbers, so we can see that it will further go down. Okay, now we need to find out what will be the uh, you know guesses for the support levels and the resistance levels, right? What can we expect, where the market will go down, how much it will go down? Okay, so if we can expect from this particular thing, just give me a moment. I will stop the screen for now. Okay, uh, so to completely give you a synopsis where we are headed and where we are going currently, right? We need to know a lot of factors first of all, and these factors are just basically common sense. Okay, and if we cannot apply common sense in the market, okay, in the market, then we can kind of understand the market in a way which is a bit hard for us to decode, right? So sometimes the market is hard for us to decode because we are taking it, a bit uh, on the uh, excessively we are doing this analysis, right? So I usually call it analysis by paralysis. Many people call it this, right? Analysis by paralysis. But there are sometimes reasons as to where we are, and this can be a supposed level if it breaks down, and these can be the levels if it goes up. Okay, we already know when it will go up. In the situation when US PMI will be lower than expected, lower than forecasted, okay, market will react in that manner. And if not, if the market surprises us, pardon me, if the number surprises us, the market as well, we will see a continuous downturn. Okay, it will continue to go down. Now this ranging market will continue for some time. Okay, this range, if you can see very clearly, this is almost a ranging market, not much to do here. Okay, low volatility. We have already seen a lower downward momentum previously. Okay, now it is low. Now it is ranging. Okay, nothing much to discuss over here. But these levels are obviously from an education point of view. So we can expect the market to go down all the way. Okay, or it can go up as well, depending upon the data that is going to come out. Another important level can be somewhere around this point. Okay, I want to just touch this. Yes, this can be a level. Okay, and apart from that, we see a lot of resistance at this point. Okay, around this, which is also formed as support. So we will just try to capture this as well. So around this particular level and this one, we can see some form of support, some sort of support, right? And in the long term, in the short run, these can be the supposed resistances. Okay, these are completely from a perspective of understanding the market. Okay, it is not about uh, trading. It is not a trading advice. Okay, and consider it like so. This is the scenario. This one is the second scenario, and if it continues, it will gain. It will regain all the it will cover all the losses that it has incurred due to a shortfall in PMI, due to a shortfall in the data, right? So it will recover all the way up to this point. Otherwise, if US tries to, do a dirty little trick on us, then it can move all the way down as well. Okay, it will continue to go down. This situation is where the market rests. Okay, sometimes when you are thinking and you don't know the answer to something, okay, and you're sitting in the examination hall or wherever you're sitting, you you sit and you ponder upon that question. Okay, you are sitting stationary, okay, or at least moving a few paces back and forth. So this is the scenario, a few paces back and forth, being almost stationary. Okay, so this is the scenario where market is thinking where to go. So yes, this is one scenario in this particular case. Okay, all of these levels are completely from a you know okay, yeah, from perspective of education, not from a perspective of trading. Okay, let us go on to euro. Now euro was not very uh, you know different. Okay, previously we had drawn this and we had drawn some other things as well. Okay, wait a second, there's something that's going on. Okay, just give me a moment, I will reconnect. Okay, Okay. Okay, there was some technical issue. No worries, we are back on track. I hope the technical issue has been resolved. The video is visible and the audio is audible. If there is any trouble with this, please comment on the chat box as to what needs to be done. Okay, just let me know about any particular technical issue. Okay, that has happened. Okay, so I will start. Oh my God, it's gone again. Okay, let's continue. So, this is the scenario. Previously, we drew some range here. Okay, this range was quite fantastic. It has worked till the point where it went up and unsuccessfully it came back down. So we did this around in the previous Tuesday, I suppose. We were here. The previous Tuesday was somewhere around at this point. Where it is? Yeah, so somewhere around here we were, and I discussed about the range that it will go through. Okay, so it went up, it took a resistance, it came down. Again, it took a support, went up, not going all the way into the range. Okay, it has consolidated below the range, then it went up again. It went and it took almost a similar resistance to the previous one, and it went all the way down. Took a support around this range's extreme low. Okay, then it went up again, now forming a better high than the previous one, higher high than the previous high. Okay, it went down all the way again. All of these movements involved some form of news. Okay, some form of news, some form of factors that worked, but the technical range remains as though useless. But if you consider the range to be a reference point, then it can be helpful for you, because the range has worked all the way till this point. Okay, from the Monday it was working. From a reference point of view, this range is quite amazing, because it has shown us when the prices come into the range, and now the price has become a bit, uh, resisted. Okay, it resists this range. Okay, so it does not stay in the range very often. Okay, it quickly moves away from the range. Okay, it quickly moves away out of the range again. Okay, here it has consolidated, but again went down. And currently, when we see this range is absolutely of no use. Okay, because the price has moved up. We will delete this. I'll try to bring it again so that we can see if currently if it is in any form of use. Okay, so yes, it has shown us supports at times. Okay, three times it has shown us some form of support. This candle, obviously, what is the name of this candle? Can you please comment in the chat box? As we see a Japanese candlestick pattern, I try to renew your memory to the candlestick patterns that we have done previously on this channel, right? So we have seen this part where this candle is working and it has the prices went up. It's complete reversal. Okay, but the reversal is worthy to note because it has just touched the tip of the uh, extreme high of this range, right? This is the range that we made. It became vague and useless, but again, it has somewhat came back into use. Okay, again, a small reference to this particular range, and the prices went up again. So, yes, even if we see that the range has become or the levels have become completely, uh, uh, vague, or they are not of use to us anymore, then we can just let them on the screen. Okay, and see the price action where it is heading. Okay, if it is respecting that particular level or not. Talking about levels, these are the levels that we can expect from the market. Okay, that was one of the level. I'll have to remove this range. Okay, so I've removed this range. Now we can see better. Okay, consider this particular scenario, the current scenario. Okay, today from the starting we have seen an upside. Okay, we have seen an upside which has completely taken resistance at this point. Okay, this is an important resistance point, 1.0895. Okay, and then shorting has come in, and shorting has come in even after 2. Okay, so when the PMI was released, it was around, I suppose, 12:30 or something, or if I'm not wrong, it's about 1:45 or 2 o'clock, right? So it was before the GBP. Okay, so 1:45 to 2:30. So around 2, the data came out. Okay, and it went down. The price went down. Along with that, it has taken support around this particular level. It has not reached all the way till this point. Okay, 1.0848. It has not reached this particular level. It has just recovered from here, making almost a range. Now this one is also candlestick pattern. Okay, it has to support. It was supposed to go up uh, very smoothly upside from this point, but it has not. The price is somewhat being contradicted by this shorting candle. Okay, again you can name this candle in the chat box if anybody knows. Okay, so somebody has come in who is very excited. What can we buy GU? Okay, I don't understand what exactly this person wants. Can you please elaborate on your request? We will try to accommodate the question. Now it was supposed to go up, and it is somewhat taking a support at this level, and it is slowly moving upside. Okay, so this is the scenario in the market currently. Okay, okay, yeah. So let us move on. Okay, so these were the two most favorite currencies. These are the levels, completely educational point of view. We will see an upside because euro is currently in a position where it can sustain higher levels. Okay, but when it comes to USD, it is supposed to slowly move down. Okay, that is possible when we see USD as a base pair. Okay, when we see USD as a base pair, we know somewhat of a upside has been received after the Japanese meeting. Okay, that upside was quite immense. It has went all the way up, came all the way down again. Then again it has went up, and now it is above these levels only. Okay, so 129 was supposedly one of the supports, but not a very strong support, I would say, around 129. But because of some fundamental factors, the move has been quite commendable, upside as well as downside. Okay, so this range has been continuing, which we actually made. Look at this, how immaculate this range is. Okay, constantly it is working, and we have never seen a breakout either ways. Okay, so what we can say right now it is going through a lower volatility phase. Okay, candles are small. Let us see. The candles are small, ranging. Okay, it has went down, it has come up, but not much movement around it. Okay, 200, 300 pips. But now, as the market is expecting something, it is in a range. Okay, until 18, like 6 o'clock or some 8 o'clock, after we end this particular live stream, we will get the data. We will see where it goes and how the market reacts to it. Now, not only the number is important, but what exactly is happening to the economy after that number has come out. Like we saw, there was some good numbers in GBP as well. Okay, in UK as well, there was some good numbers. But overall, the output decline, okay, that was at the fastest pace. Okay, this guy is GBP USD. He was asking lazy ALR. Please try to speak in English because we don't understand such slangs. Okay. So GBP USD already we discussed. Okay. You can go back into the video, or I will try to show up where it is right now. Okay. Again, we will try to uh, get back to it. But the scenario at this point is that it is already around the extreme high of the range. Okay, you cannot see the candles very smoothly from this perspective, from this zoomed out perspective, but still we can see that it is above the range, above the middle of the range, and it is quite near to the extreme high of the range, right? And this range is already falling. Okay, this is a downtrending range that we have made. Okay, so if I go to a higher time frame, we will see how beautifully this has worked for a very long time. Okay, this has come down and it is continuously following this route. Okay, okay. So this is a 4 hour time frame. It is going around, hitting the upside as a resistance and coming back down to the support levels, and it is coming up again. Now it is already very near to the extreme high. Okay, and if USD tries to surprise the market, this will be a very strong resistance, I would say. So the data will come out somewhere around 8:15, 8:30. Well, around that time, okay, we will see in the shorter time frame where we will be. Okay, 8:30 if we are at this particular point. Okay, we will be around 9:15, 8 o'clock. Around 131.6 will be the resistance. Okay, it will face a strong resistance. Now there is not much hope left for USD for the upside, because and just because the Japan is following a very easy money policy. That is why USD has gotten some floating here. Otherwise it was to break this range and come down. Okay, so this has been the scenario in USD JPY, talking about one of the most loved uh, commodities. We'll get back to it. Okay, what is happening in gold? Okay, now this is very interesting. Okay, because gold has somewhat given us a movement higher than the previous week's high. Okay, it has given us something today, and it has given us opportunities as well. So let us see where we are currently. There are so many levels, you might get confused, you might not see this. So I mean, I'm hiding all these levels. Let us see from bare bone perspective where we are. Okay, so this is where we started a range, and this was the scenario. It was having a strong resistance around this point. Okay, so 1936, which it is currently trading at. So it was previous high, if you can see around this cursor. Okay, and it is currently trading at this point only. It has made a new high of 1942. Okay, 1942. I'm bringing back the levels that I had shared previously. Okay, just I will check with the levels. I think I had put up a level on another one on the screen on the group. I have shared one. So I'll just check. 141. I remember 1941 was one of the levels. So yes, it was actually 1941 was one of the levels. Let us delete all these and let us make, because I suppose these are wrong. The levels that I had drawn previously. Okay, those were the levels. So above was 1950 around something. Okay, I will have to remove the magnets. Now remember that all these levels that I'm drawing currently are from an education point of view. Okay, these are not from helping or giving you trading advices or suggestions. Okay, all of this is purely from an educational point of view. Okay, one was 1950. I had shared this on our group. If you are not a part of it, then you are seriously missing out. Okay, so you can just join our group so that you can be ahead of times. You can learn better the markets. Okay, only learn better. Okay, so yes, get my hints. Okay, another one was around 1944, and 1941 was also one of the levels. If I'm not wrong, and I'm not wrong in this scenario, 1941 was around this particular point. Let us say 1941.525. Another one was 1938. Okay. Then there was a small range. Okay, very small range. 1935.8 to 35.2. So let us draw a range itself. Okay, 1935.2. So 35.8 to 2. Okay, so this was the one of the range. Let us remove the text. The label option is not there. Okay, it will come, no worries. We'll try to ignore that. The next one was around, I suppose, 1932, 33. So 1932, 33 is around this level. Let us draw just one line because it is a range of very small level. Okay, 32, 33, 1929 around. Yes, so let us draw 1929 here. All of this is obviously I have shared. Okay, this one is back here. Even 1929, right? Okay, 1929 to 26 was somewhere around this level. Okay, for now, this much is understood. Okay, this much is enough. Okay, until that time, I will just quickly draw other levels as well. Yes, so let us draw other levels as well. 21, 17, and 11, trying to give respect, due respect to this particular support. Okay, so all these levels are made. Let us see where we are at and where we are heading. The 38 was somewhat of a level. Yes, it is. 41 was one of the levels which has worked previously. Okay, let us consider 41 point something something something. Okay, 41 which means 41.01 to 41.99. This range you can consider. Okay, so the high was around 1942.48. Okay, somewhat out. Okay, but it is close enough for our reference. Okay, so all these levels, this one as well has worked very okay, uh, nice. So yeah, I had done that previously. Okay, so right now it doesn't seem much, but these candles, the ranging of these candles is important to see and note. Okay, so these candles, what they are saying is that we have taken a support. It is appearing a bit vague because this is all obviously a range, and I was also confused at what exactly number to arrive at. Okay, because this number, because of the higher volatility, it gets a bit tricky to jump down to a simple number. Okay, to the point. Okay, so that is a bit hard. However, vaguely speaking, this has worked. Okay, the the candles have taken a support. It has moved up, pumped up, then came back down. Okay, then it has taken a support at this uh, level only. Okay, it has not breached down. on this level. Okay, within 15 minutes it has come down. Okay, and then it has moved up again, and then it is currently facing a shorting candle. Okay, now the scenario is that all these levels might be working vaguely, but these are a reference point. Okay, these are not exact entry points or exit points. However, we see that this high which has been made by gold shows that there will be higher volatility and there will be higher upside in the market for some time, until many people are saying that yeah, thank you, Bimar Pradana, uh, for being a valuable part. So, to our live streaming and commenting. So, this is the scenario. Other supports, if we can, if we talk about, this is the scenario where it has taken a support. Okay. Now, if it breaks down, the next support will be around this point. Okay, 32. And then if it breaks down, 1929. Why small levels I have put in? Because the volatility is very high. So we don't know at what level the price will respect the support. Okay, we need to have all these levels in our perspective, in our vision, that any particular uh, place the price can take a stop. Okay, and then move back or range or pull back somewhat of that level. Okay, now it has come down, and now let us see if this range is respected again or not. Now it is trying to move up because the market is already targeting that US will have a bad data, a bad PMI. Okay, considering the overall economic climate of US. Okay, so if we go back down to the numbers, we are expecting around 45.3 for flash services PMI, which is very low, already contracting. Okay, and flash manufacturing PMI around 46. Okay, which is lower than the previous one, 46.2. Also, we are targeting a better PMI than the previous one, that is 44.7 for flash services, right? So, services we are targeting a better one, but for manufacturing, we already expect that it will come down from the previous months, 46.2 to 46. Okay, now this is the scenario where it gets confusing, because services industry is also suffering now. Okay, previously it was just manufacturing because of COVID and because of other factors which has led to economic slowdown in US economy, but services sector is also kind of moving down along with the manufacturing. Obviously services is a bit what do we say, it is complementary to manufacturing, and that is why it has taken some time to come down, because previously we have seen, uh, when we see the monthly movements, it was quite up. Okay, when compared to manufacturing PMI during the COVID and after the COVID, right? But from July it has been consistently down. Okay, services PMI, and below 50 level, but it was higher than the manufacturing level. Okay, manufacturing PMI levels. So no, overall it was actually lower than the PM manufacturing PMI level. So overall what we can see here is that there is a downturn in the overall movement. Okay, it was an overall movement which is showing us a downturn in the economic manufacturing and economic services. Correct. So this is the scenario. It has come down, formed another red candle. Okay. For somebody who was talking about GBP USD, we'll get back to it very soon. Okay. So yeah, one more thing that the gold has done is that it has made a higher high. Okay, than the previous one. So it has made a higher high, and this is where we stand. From a more bigger perspective, I will delete all these levels. Okay, okay. So looking at the daily one, we had already drawn the trend lines and stuff like that. So just a small quick exercise as to where we stand right now. Okay, so it was a very steep upside, so we cannot draw a trend line which can be respected. Okay, in the near term. So let us draw this downward wala trend line first. It was again respected at this point. Okay, So this one was quite respectable, but this upside is very very steep. If you are seeing, right, if I'm drawing it from this point, then it is very steep. However, it has shown a curve. Okay, it has shown somewhat of a curve. So somewhat of a curving upside, right? So given a small minute changes in the price levels, okay, it has somewhat shown a very strong and eager upside. Okay, it is an eager upside because people are already hogging in, and we don't know, many central banks are also hogging to this particular level. Okay. Okay, yeah. So this is very bad scenario because a lot of people are buying gold. Not only just retail investors are looking to make some profits, okay, but they are also looking forward to buying gold, which includes some of the other investors, some of the other stakeholders in the market, including central banks. However, they are very quiet about it. Okay, they don't speak up that we are buying gold. They might say that we are buying bonds, and they might completely publicize it to increase the valuation of their bonds, but they will never say that we are buying gold. Okay, buying gold is an economic hedge, okay, for these banks, and they are doing it. And that is why this pump has been very steep and consistent, I would say. You will see there are red days, okay, you will see that there are ranges in here, but again, this is a very strong upside, okay, and retail traders have hogged in, I would say, at this place only, which we covered, I suppose, on Tuesday of November of 8, or on this particular Tuesday, 15th of November. Okay, so we had confirmed that this is a breakout and this will continue upside until there comes to be a stop in the upside. Okay, currently we see we have already seen in the 15-minute time frame, right? Now, if I want to bring all the lines back, let us just see if we can bring the lines back. Okay, so these are the lines back. So we will see that there is a resistance upside of 1950. It is also a psychological ceiling. Okay, many people would not want the gold to be very much inflated because they have to sell again. Okay, so they will have to hog into this particular levels. Okay, so yes, this is the scenario. Okay, apart from this, let us get back to GBP USD because somebody was asking about it. Okay, so we see that the breakdown has occurred. We had just shown this level, and this is a proper Marubozu candle. This Marubozu has occurred here, which is a strong selling signal. Okay, however, the next candle is a green candle. Okay, until and unless this breaks out of this particular high or open, I would say this is still going down all the way till this point. Okay, this is still going down because the range has been broken. Okay, if I draw a range here, it has been broken, and people now expect something from the data, I would say. Yes, this is a breakdown, and this is also breakdown of our level. Okay, both the things have happened simultaneously, concurrently. Okay, if this is 15-minute time frame, so you get some time. You get enough time to react to this movement. Okay, it is not sudden movement. You get some time to react to it, and this has been the scenario. Now it might, suppose so, it might look like it is moving upside. Okay, but it won't go above this high. Okay, it will upside, it will go upside, it will take a resistance here, it will not go upside all the way to this point, right? And if it breaks, obviously, then our stop losses will get hit. So this downside has to continue to this particular level. Otherwise, if the data is bad, if the data is bad, then this will continue upside for USD PMI. Okay, US PMI, if it is bad as we are expecting it to be, and as the market is already forecasting it to be lower than the previous month's PMI, then it has to go up. Otherwise, it will go down, touch this level. Okay, if it breaks this two, then all the way to 216, right? So all these levels, and here we are standing. Okay, here we are standing at a very uh, precarious situation. We should not involve ourselves in this scenario. Okay, so this is the scenario where many people talk about risk. Okay, this is the risk management scenario where we have to stay away from the market. We have to not see this long move and consider that this is a shorting opportunity, or we have to not see this range to be one of the perspective that it has broken down, it is coming down. Okay, we have to wait for the data, because whatever happens before the data and whatever happens after the data, okay, that is completely dependent upon the data. Whatever happens during the data, okay, that is only what is the perspective of the market. Okay, that will tell us where we are heading. During the data, a lot of people come out and they take huge positions in the market. Okay, when they take huge positions, we see that positions in the market. Okay, via tick data? No, obviously not, because we are not available of the tick data of all the brokers out there in the world. Okay, but we are seeing the price chart and we are seeing the volume indicator, right? Please pardon me. Okay, so back again. If you have any form of asset that you need, that this particular thing we need the levels or we need the idea of where we are, you can post it in the comments. We have already seen euro, we have seen GBP, we have seen gold, and if you want anything else, I would try to continue with my own understanding. If you want anything else, we will look at that as well. Now, one of the important things that I noticed in S&P 500 is that it had broken out of its range. Okay, it had broken out of its very long range. Okay, and somehow it is still facing some of a somewhat of a resistance, right? Is facing somewhat of a trouble going up. Okay, so this is the daily chart and these are the levels. Kindly ignore this, just look at this particular one. Okay, this is the trend line, which is very long trend line. Okay, year long, I would say, right? It has went up, it has covered all the way up, and it is currently here. And we have seen all these red days. We tried to short also around this particular position because this is the extreme of our range and this will go down obviously, but it has not continued all the way going down. Okay, it has went up because, and it has went up and it has crossed our limit, it has crossed the trend line, but today we are seeing a red day. Okay, however, when the American session opens up, we might see a short covering. Okay, here. Okay, and if the PMI is bad, if the PMI is bad, then it will continue to go down. So all these levels that we have seen on the shorter time frame, if we go, then this has provided us multiple entries. Okay, multiple entries, very strong entries, pumping up all the way, right? And this was the saturation point of the levels of the buying. Okay, so let us respect this, provide a good line here for our perspective. Okay, and then it has fallen down like almost a waterfall, and then it has continued to be a small range. Okay, ranging movement almost. This is somewhat what we call up an upside. When we are breaking out of a range, we kind of think that yes, it will survive outside of the range. But if you see here, multiple times it has survived for a very long period of time. This time it has moved up and it has survived, and it has consolidated above the trend line for a considerable time. Okay, and then here also it has survived for a considerable time, but it has all the way went down again. It could not survive and it could not consolidate. Okay, the number of red candles almost appear to be the same here in this case. That is why I'm not very confident when it comes to S&P 500 breaking its range. Not very confident, however, technically, but there might be some factors which might pull it up again. Okay, the American session is wild when it comes to trading. Okay, people buy like crazy, and the market goes up in flurries. Okay, so this is multiple times they have shown this movement is a strong movement side. Okay, so when we will see, when we will go into the timing of it, it has always been around the American session. Okay, so it is 8 o'clock, almost 8 o'clock when the American session starts. Always it will move up. Okay, so 8 o'clock here it has moved up again. Around 8 o'clock here it has moved up. So this is the scenario. People are buying. Okay, they are not letting it go. Okay, they are not letting it fall in the range. It should go down, but it is not falling down. That is the scenario. So this is the scenario overall. We have very can we just provide one last comment on this particular scenario of what will go uh, in terms of so now we are seeing that euro is doing quite well for itself, and the PMI is also kind of following the kind of a recovery phase, but it is not possible. Okay, from a perspective of economics, it just not it does not fall very easy for the eyes. It is not very easy for the eyes to understand in that manner. And talking about US economy, obviously it is in huge stress right now because multiple people have said this again and again that the recession is inbound and the recession is out there. Multiple times you have seen such moves downside. Okay, we have seen many moves downside, but still there is support somewhere. Okay, so the support is evident, especially when we're talking about huge uh, you know dividend wala currency pairs. If you're talking about highly traded currency pairs, give me a moment. Okay, so we're talking about USD JPY, we are talking about USDX, we are talking about USD CHF, right? So franc. So all of these we have seen huge downfalls. Okay, quick downfalls as well, right? But still it has respected somewhat of a support. Some it has gotten support, and the prices moved up, right? Now, the previous, especially if you're talking about the case study of USD JPY, it was obviously the tweak from the Japanese banks that have come up, right? And that has supported USD's upside and has somewhat provided a support because of its easy money policy and because of its very, inconsistent approach, I would say. They are very consistent, but it doesn't fit well with the market. Okay, so it does not fit well with the market, and obviously the the people are waiting for this range to get out. Okay, they want to flow out of this range somewhere. Okay, and actually, when we are talking about people, I'm mostly talking about myself. so this is the moment when we need to where we are waiting for a moment of sell, because obviously trading in a range is difficult. and it is risky. Okay, so talking about the PMI, yes, we will see what verdict we will have in flash PMI. We already forecast it to be lower. This one, if you see, lower than the previous one, and this one you will see lower than the previous month data. This one is a bit higher than the previous month data. Okay, December was very bad. Now we are expecting a better flash services PMI. We will see what will happen around this particular time. Richmond Manufacturing Index, the same thing. Okay, not the same thing, but it is a composite index again. Okay, for manufacturers in Richmond. So this is the scenario. Talking about the rest of the week, we will see CPI tomorrow of the oceanic countries, New Zealand and Australia. Then we'll come back to Canada for its report, monetary policy report, where they are heading. They are also closely following Fed. Okay, they are very closely following Federal Reserve Bank of US, and they are maintaining their rate uh, despite a lot of pressure on the economy, despite a lot of wage problems. Okay, uh, there is a demand for increase in wage because of the inflation that Canada is going through, right? Despite that, you will see that this particular report will come out tomorrow, and advanced GDP, all of this will come out. Now, one more important thing that I would like to share with you as I'm going is that again this PCI is also important, and then we will end the data, end the week with PCE, sorry, the price index. Okay, so personal consumption expenditure, something, expenditure, right? So this one price index, we will see where it is heading. If it is slowing down, this is the basic criteria for the Fed. Okay, they will look at this particular number and they will try to manage their numbers accordingly. So this is the scenario overall. One more thing that I would like to suggest is that March is coming soon, and many evaluations will come, many reports will come. Okay, and all these reports will suggest that economy is not only contracting, but it is in a very depressive phase. Okay, it is not very depression. It is not a depression, but it is in a depressive phase, and that is why we need to be very vigilant in our positions. We need to be not risk averse, but we need to be aware of the risks. Okay, so be remain aware of the risks, be vigilant, and constantly look for new ways of learning. Okay, so thank you very much for joining in today, and happy trading.